Okay, welcome everyone to another episode of Finance Village. I'm your host, Sheldon, and I have my co-host, Sean Adeyemi. And we've got a very exciting episode today, a service not nearly common enough, and we've got a great expert in regards to that. We're going to be talking about why business owners should regularly review their banking services and how they can often overlook opportunities to save money. I'd like to introduce John Pelley, who's got over 35 years in big banking, and he will explain how a thorough audit of these services can uncover hidden fees and reduce costs. And I'm going to start out, John, just by kind of highlighting that one of the first jobs I ever had in the finance world was working at one of the big banks in their call center. I started in just like the regular queue, as they called it, where I would take 50 to 80 calls a day, people calling in for all kinds of things. And I moved over to small business banking. And just in the bank accounts alone, I saw tons and tons and tons of business owners that were paying 2, 3, 4, all the way up to 10 plus times what they should be paying just on their bank account fees by using them incorrectly. And I had always ideated of this idea of having this, is your bank treating you as you deserve to be treated as a client, for the quality of client that you are, for all of these different things, and doing this kind of audit. And I even created this beautiful report, but never got around to it. And you now have a very successful business with a significantly more robust one than I could have dreamed of, where you're helping business owners, I think all the way from small, medium, and large, look at those banking relationships and see if they're being minimized on their bank fees, their interest, and everything else. But just give us a quick overview and maybe just give us a better intro of yourself, and don't be scared to brag a little bit.
Well, thanks, Sheldon. Very pleased to join you guys today. As you mentioned, I've got 35 years in banking and an additional 5 years now on the consulting or auditing side. So our mandate, our vision is really to help people save money, or at least optimize their banking services. Similar to you, I started out many years ago in the banking world. I did some internal work for the banks, and then got into the small business lending side of things, moved up into commercial lending, then moved into what they call cash and treasury management services. So I've had, varying degrees of seniority going up the line over the years. I started out in Newfoundland, so I understand the value of the hard work that businesses and business owners put in to making a living for themselves, but also for their employees. Sadly, like you, I believe that banks are overcharging, charging more than they should be, and people are not optimizing the services. Some of that is an education issue as well, and some of it is banks make things overly complicated for people. Even your average banker doesn't know what they should know when it comes to the business banking side of things.
Well, I want to highlight those 2 points that you just mentioned. So, number one, research shows that the more complex the banking products are, the more profitable they are for banks. So there is some level of intention in that, and I would quadruple down on what you said. I have had, I was in the big banks for over a decade, and there was people that had been at the bank for 20 and 30 years, and had certainly done their time on the front lines, that were oblivious to so much, not just in their policies and fine print, but in the basics of the code of conduct, some of the stuff that would roll out as policies. So even if the bank CEO really wants to do the best thing, they know how to construct that education and try to work that in within all these high pressure sales targets and everything else. And even if you have somebody wonderful at the bank, because that's really where we're going to get that best experience, is finding that one person we can trust, that we feel that even though there's this large entity, this person's going to give us the same advice they would give their grandmother. Hopefully, they may not be getting that training and insight that they would love to be able to give, and even sometimes not given the time because they have average call times that they have to uphold in the call centers. They have to hit their scorecard of their product mix. So it's a very challenging environment for the best of people to operate in a way that you and I think would advocate for. And there's a lot of opportunity So maybe I'll get you just to quickly tell us, why do you think that business owners, it's so easy for them, other than the reasons I've mentioned? I mean, obviously business owners are very, very busy. What is kind of the overarching products and services that you'll see a business owner engaging where there may be some opportunity? Because it's not just the bank accounts that I was dealing with mostly. There's a lot more products that they have at their helm, and some that they don't even, not even aware of sometimes.
Yeah, absolutely. One of the key points you just made is you need somebody to who's willing to advocate for you from a business banking perspective, because the reality is the frontline people that the average business owner is dealing with have no decision-making capability. They can only make recommendations to the next person up the line, and then it has to move up various levels for final approval. So what you have to do is one, do your homework thoroughly, but also make it as easy as possible for your contact to be able to present that information in a reasonable manner, and one, get their supervisor on board with it, and then be able to move it up to the necessary levels for final approval, right?
Okay, I just want to highlight that one extra point too that you've said, because sometimes with people being busy, and this happens in every segment of the industry, and certainly, and I'm sure that Sean can attest to on the mortgages, is we no longer live in an era where you can just go in, shake a hand, get an approval. We have to supply information. There's a lot of fraudsters out there. There's a lot of compliance and different things of the bank. So I totally agree, and that's very much the language I've used. You need to have an advocate at least in the bank, ideally outside of the bank, because then you lose that bias. And I've always said that because I've always kind of offered this free service to my mortgage clients, is if your bank is ever, ticking you off, give me a call. I'm a bulldog banker. I understand the fine print, the day-to-day banking, and I will make sure that I equip you quickly with what you need to go and give them a spanking. But you need to supply those people with the appropriate information, and don't hesitate to do so. I'm not saying give your banking information out to any old person that calls you, but if you've got a referral from John, somebody like myself or Sean that refers you and said, this is somebody I know, this is somebody I trust, this is somebody I know does great work, and you have a intro meeting with them, you want to go ahead and get them the information to do the thing that you want them to do. Don't hesitate to fully equip them to achieve the goal.
Before you answer that question, John, I want to add to that is, why do you think the banks require that extra level of permission to do certain things for the client? Like you just talked about, if they want to help the client with this, they need to get extra permission. Why do you think that's the case for that? Is that intentional to make it more arduous?
And even when they empower them, it's not even necessarily used enough. I used to, in the small business department, get up to $500 that I could credit a client at any time. And I used to use it. I wouldn't say like I wasn't just out there like just carelessly using it all over the place, but I used it very appropriately. There's a lot of, if a senior calls in and they're 62, this happened to my mother, and they've been paying for the seniors account, paying for the regular account, not getting the free seniors thing. In 1 month, she paid $110. Yeah. I would see those types of situations and say, I'm not just going to educate you to switch over to the free. We're going to reverse your last 3 months without you having to even ask. And the banks are very bad at long-term math. The CEO comes in and they need to, in a very short period of time, make all these changes, create all this, additional revenue, when we forget that it's about, our goal should be always to have lifetime customers. And we need to conduct ourselves in that way so that we have that proactive goodwill and gestures. But yeah, go ahead. And what are some other reasons that you think that that's not happening sufficiently, John?
To Sean's question, I think it is intentional that they want the people on the front lines to be focused on sales, and they don't necessarily consider retention to be part of that sales process. So if you need to understand on the business side of things the mentality of these folks, and Sheldon raised it a little bit earlier. is, they've got a scorecard that's very complex, multiple things that they have to be watching out for. But typically, portfolio growth is going to be the largest single factor in that. And the reality is, doesn't matter the nature of the business. Banks are going to be profitable. When interest rates rise, they make money. When interest rates fall, they make money. And the reality is, it's a matter of they want to, I think, keep the frontline people away from any controversy or any difficult decisions, and move that up the line to people who are not customer facing. And you can always then blame it. Well, as the customer facing person, you can always say, well, look, they're just not going to approve it for me. It's somebody else making the negative decision, not me. This is the best I can do for you. Right.
Passing the buck.
Yeah, which makes a lot of sense. And I think for advisors, that's where part of our value should come into. How can advisors, because we're doing financial planning, that's what we say we're doing. Not everyone is doing that, but that's what we're supposed to be doing. And part of financial planning is cash flow. And so if we're saying that advisors, that we're going to be offering financial planning or financial advice to clients, I think this is a missed opportunity for advisors, is to take a look at clients' bank accounts, whether business or personal, and look at what are you spending, what are your spending habits, but even beyond just digging into the spending habits, what expenses do I see recurring on your statements, and is there advice or insight that I can give as an advisor to, you're spending $100 on banking fees. Why are you spending so much? Is it over? And it's not even overdraft. Overdraft is a different story, which it pisses me off, to use lack of a better word, when I see these overdraft fees and client has sufficient funds in other accounts, but the specific accounts where they're doing a lot of debits, they're often going under. And I don't understand why banks cannot just do automatic transfers from, for instance, I have bank accounts in the US. I have a checking attached to a savings. And typically, most of my chunk of my money is in the savings account because I want to get that little daily interest every month. And so there isn't often enough sometimes in my checking account. But what I do see is when transactions go in, if there's insufficient funds in my checking, they automatically go into my savings to make up that difference, which helps me avoid a lot of those extra banking fees and NSF fees. And it kills me that Canadian banks don't offer that service. And so there's this constant, before you know it, in addition to all this extra fees a client are paying, they're paying NSF fees.
That exists in the U.S.?
That exists in the U.S.
Oh, wow.
It exists in the U.S., but it does not exist in Canada. So I think it behoves advisors, and I'm putting this out there for advisors listening, for us to do a better job of educating clients, of reviewing their statements and see what savings can we give them to help them save on all these transaction fees. Now, I'm going to throw this other question to you, John. What are the fees you're typically seeing our clients paying that they should not be paying for, both for the personal banking and for business banking?
I can't speak to the personal side, but that's certainly not my expertise. My expertise is on the business side, and the reality is it's every dollar of revenue that runs through a company and goes into your bank account, which you have to have a bank account for accounting purposes and for HST and every other government service as well. So you got to have a bank account. Every dollar of revenue or capital that you drive through that account attracts a fee to it. In one way or another, there's a fee attached to that. Every dollar that you expend from your bank account attracts a fee to that. So you have to look at it a little differently, as opposed to just saying, well, it's bank fees, that's it. If you change your mindset and start looking at that and say, if I look at this as from a gross margin perspective, I'm probably losing a couple points of gross margin because of my bank fees, right? Whether it's payment services, merchant services, accounts receivable collection, whatever, every dollar comes in. So there's not real fond of it, but I've used the analogy in the past that, every dollar flows through the account. There's a little bit sticks to the banker's fingers every time it comes in and goes out, right? Then there's the other part. So, okay, so you've got some money sitting in your account. What are you doing with that? How do you optimize that? Can it be used to pay down loans? Can it be, and recycled back and forth? Or are they paying you anything for that? The bankers will typically say, no, we don't pay interest on business accounts. Okay, well, if you're not going to compensate me from an interest perspective, then maybe I should be getting a break on my service charges, because you're getting use of my money. You're leveraging that up 10 times and lending it out to people at higher rates than you're borrowing it at. So when you understand the language that you can use in talking to these folks on a larger scale, they start to get the message that, oh yeah, we need to look at something, right? So is there a particular fee that ticks me off? No, not really, because the reality is you've signed an agreement with the bank that says this is all the fees that I'm going to have to pay. Now, obviously, that's probably anywhere from 10 to 12 pages, and it grows continuously and exponentially. And every couple months, they'll say, oh, well, now we're going to increase this fee, and now we're going to increase that fee. So there's always the fee creep aspect of it, right? Mm-hmm. The other thing, I've seen lots of examples where people have had services that they don't need, and they're continuously paying a fee for that, right? Or they've got services that they're not optimizing, using in the best possible way, and they're paying fees for that are not beneficial to them, whatever, right? So the reality is, banking fee structures, interest rate structures, it's a necessary evil. It's part of doing business. But when you understand it and you've got some education about it, you can reduce those significantly, right? And then that money goes straight to the bottom line of the company, right? There's no gross margin on it or anything else. There's no other expenses that get attached to it as it flows through. That's bottom line money, right? And as advisors, if you can help a company business owner save $50,000, $75,000, $100,000 a year, that's more money that they've got to increase wages, expand on their group benefits, group RSPs, whatever, donations, anything. Just don't pay it out to the bank. Use it to your advantage. You're not getting anything from the bank by simply paying that out to them. But your employees could use it. You could use it from a financial planning perspective yourselves. There's a lot more benefit to be gained by doing these.
Do anything with it, but donate it to the bank, I suppose.
Well, let me tell you this. So last year, the big 5 banks, net profit, $101,000 a minute. Right? They don't.
I think it was like 14 million in overdraft fees alone. Just with one bank.
Kills me.
Sorry, go ahead, Sean. You wanted to say something.
No, that reminds me of the question, which is more valuable, a dollar earned or a dollar saved?
Well, a dollar earned depends if it's after tax or not, right? So a dollar saved, again, drops right to the bottom line. So my view is, you need some loans sometime to leverage up and buy more inventory and finance things. But there's good debt and there's bad debt, right?
Mm. And the big thing I want to say to advisors, because, and I want you to, quickly speak to this, Sean. There's going to be more and more roles. I think that, I've got some colleagues that are working on really bringing in some lower level advisory at a money coach level that can look at these types of things and help make sure that advisors are engaging people in companies like your own, John. Advisors can often feel, because they want to manage wealth and they want to sell nice insurance policies, that such work and such reviews can be beneath them. Now, they still usually may have some assistants or associates and different things. There are ways that this can be done, but this is why we want to have this podcast and highlight your service, John, because they don't have to do work that they feel is beneath them. They can now coordinate and collaborate holistically with great other advisory services like yourself, because otherwise there is a lack of simplicity out there. There's a lack of consumable disclosure. Not only did I have the dream of creating a business like yours one day, John, and I bless you for having done it, because I don't know if I've ever get around to it with all the things I'm trying to change in finance. But one of the other dreams I have is to simplify full and fair disclosure. They talk about these things in the bank code of conduct type of things, but it really just feels more like it's there for the regulators and there for the public perception, but the execution of it is often dismissed and neglected. The lack of training staff and pressure on staff, a lot of reasons, but again, this doesn't have to be something we're advocating for advisors to do, Sean, because as you know that, again, there's many things that they can feel like it's, and at the same time, you know, that they're busy, they can't necessarily get to everything, but there's great services out there like what John has, and it has to be intelligently engaged and it should not be ignored. Every financial advisor in this country that's dealing with self-employed people should be engaging the types of services that John is offering. Am I out to lunch in saying this?
No, you're not. And I can definitely testify to that because, yes, there's pressure on advisors to deliver more value. And sometimes going through bank statements and cash flow planning, not a lot of advisors like doing it. I remember that's where I cut my teeth, is going through and pouring through bank statements. But as I got deeper in my knowledge of financial planning and advancing, it became harder to keep doing that. And that's where collaboration becomes key, is even as you go deeper and in your practice as an advisor, and you're doing a lot of high level in-depth tax planning, and you no longer can do the cash flow planning at looking at bank statements, I think it behoves an advisor. How can I add more value to my client? Well, that's where you collaborate with people like John, or even like Sheldon mentioned, money coaches. It's such an underutilized segment of the population that we can bring in a lot of value by collaborating with these coaches to get granular on clients and their banking fees they're paying to deliver more value. Because at the end of the day, if I can, with my planning, save a client, let's call it $5,000 extra in taxes through combination of RSPs, deductions, and optimizing their plan. But in addition to that, I can save them, let's say they're paying $600 a month in fees that they don't realize, and I can save them even 50% of that. That's significant savings that the client can, like you said, John, divert to other things, pay themselves extra, hire more support staff, or whatever the case is, better the bottom line for that client.
Yeah, I think a key point that a lot of people miss is, people get the underlying concept of compound interest and how your money grows over time. They're not getting the concept of compound savings. So if you save $50, $100, or $1,000 a month, what does that do? Compound it over a period of time, right? Really, I mean, a bank is providing a service. It's a necessary service. There's no doubt. But, if you're going to negotiate with your other suppliers as a business owner, why wouldn't you negotiate with your bank?
Right.
And I get it. It's more complicated. There's the education piece of it. But one of the things that we're very keen on doing is when we identify, the savings for a customer, we prepare a very detailed report around, the education piece of it as well. And we make it easy for that. We'll offer to negotiate with them on their behalf at the bank. But if they just want to take the information and go, that's fine. And we offer that so that it's laid out very logically that their banker can't argue with, right? So it's like, here it is. Here's what's on the street available. Here's the market. Why am I paying higher than this, right?
Mm-hmm. I think even to add to your point of compound interest and savings, I think about the idea of compounding opportunity costs that is lost as a result of not having that savings. Like, it's not simply saving $2,000 a year, $4,000 a year. It's the loss that the business owner experiences from that compound loss over 10, 20, 30 years. That is significant in terms of what it can add to the bottom line. I want to pivot a bit and talk about what your approach is like, right? You meet with a business customer. What tools are you using? Walk me through how your service is delivered. Because I think
the intake process too, because intake process is so impactful for me It doesn't matter if you're a plumber coming over to tell me what's going on or a financial planner. You should and can judge a lot off the quality of someone on their intake process. What does that look like for you, John?
Sure. Okay. So, let's say we get a warm referral from an advisor, and we'll have a Zoom meeting, or whatever method they want to use. So first and foremost, I want to meet with the business owner and or key personnel who's going to be involved on the banking side of things. And you gotta build that relationship. You got to build that rapport and that trust. Explain to them a little bit about our process and how it goes from there, what our track record looks like, etc. So it's not, just send me all the information, I'll have a look at it. I want to understand the business as much as possible before we start to dig into it. And the first phase, and after that step is that, we ask for financial information. So we're looking at the financial statements for 3 years. We're looking at bank statements for probably a 3-month period, and potentially even merchant services for the same 3-month period. We do a very quick review of that and determine if we think there's significant savings available, or what the savings range could be. That part is free. We'll do that and just say, hey, we think we can save you $50,000 a year. Do you want to talk some more about this? Well, we dig a little deeper. So then we move to the next stage. We have another series of information asks that we get, and we start digging into things a little bit deeper. Again, we may even get to a point where it's like, okay, let's look at accelerated accounts receivable collection. Let's look at how you're doing accounts payable payments, that sort of thing. I saw one client, their average accounts payable amounts were like, their average disbursement was $50 or $60, but it was probably costing them $100 to make that $50 or $60 payment, right? So it just didn't add up properly. So look at all of those things from a business perspective, not just the fees, but the efficiencies and the processes that the company is using as well. And then, based on all that, we pull that together, we draft our report. Again, our report is very detailed. We provide an executive summary so that senior people can just read this and then go to the summary and say, yeah, how do I save this money? But also it's designed that it could actually be an education tool for new employees or people in the banking side of their whatever structure they fall under within the company. And then we lay out a very detailed plan as to how they can achieve the savings that we've identified. Sometimes it's straight negotiation with the bank. They may want to do that themselves, or they can certainly engage us. Essentially, we stay on for about a year that they can come and retain us and ask questions and that sort of thing. All this is included in our fee package, which, as we say, if we can't save you money, we don't charge you a fee. Our fee is based on the savings that we generate as a percentage of that. But at this point, we've seen significant savings for some of our customers, and they're quite happy to pay the fee. In fact, on average, we're generating a 3-year return on investment of over 600% for our clients at this point. So
let's highlight how easy of a decision that is on that model. You've got the companies out there that will have the 10-year look back on your taxes and take 35%. You've got there's a company in the US that will look at your telecommunications, your internet, and your cell phone bill and say, we believe that we can save you this much. And yes, as a client, you call in and you can go through that first unengaged, jaded call center agent and then get escalated to retention, and you can spend 2 hours on the phone and maybe have success, or you can engage an expert that's going based on a success and performance rate. It's a no-brainer. This is something that every single financial advisor, and I'll re-highlight that beautiful statistic that Grant Hicks, advisor coach extraordinaire, shared with me. The easiest client to take from another advisor is the one that has had their client the longest, because they get complacent, stop offering that additional value. And anyone that hears this podcast episode, if you're not immediately reaching out to John, I don't know what bad stuff you're smoking.
Just to add on that statistic, so the Canadian Federation of Independent Business does a survey of their members, and they've got plus over 10,000 members across Canada. Every 4 years, they do a survey on bank satisfaction, right? Last December, they released the 2023 numbers. The overall score across 4 sectors was 3.52. Now, 3.52 wouldn't be bad at a 5, but it's at a 10. The ranking is at a 10. So we're talking like a 35% satisfaction rate. They break that down into account fees, account interest rates, relationship manager knowledge, and customer satisfaction, customer service. The best score is on the customer service side of things, and that's just slightly over 5. It was 7 about 2-3 surveys ago, so it's been steadily declining. But on the bank fees, the rate is 2.57 out of 10. On rates, it's 2.52 out of 10. On the knowledge of the relationship manager is 3.46 out of 10. So there's a lot of dissatisfaction out there among these members.
For the period of time that you even get to have that relationship, because typically at that level at the bank, there's a lot of changes. The person's getting a promotion every 2 or 3 years. They're shifting over to another bank. You've got this random kind of, you don't even know that the person is gone. You go to call them and they've moved on. They don't communicate those changes really well.
Absolutely. Yeah. So yeah, you could be happy with your relationship manager, but that's not going to last forever because there's going to be somebody new in the chair before too long, right?
Mm-hmm.
But a relationship with John can last forever. And do you have repeat clients, or is it one and done?
So that's a good point. I mean, for us, I've got a client that we've done some work for every year for the past 4 years. It's not always around banking. He likes the methods that we use, and he's used us for a couple different things. But we started out on the banking side of things. So our recommendation is, people need to first they need to review their banking immediately, because we haven't found a client at this point yet that we haven't been able to save money for. Secondly, once that's done, you want to look at that a minimum of every 3 years, maximum of every 5 years. And the reason behind the 3 years, you just need some time for things to percolate through. But it's also based on the financial position of the company. So 3-year minimum for sure. As your financial statements improve, you become more profitable, or there's changes that impact the financial statements, that's a trigger to go and renegotiate with your bank. If you're a borrower, typically the banks will say, well, we have to look at this every year, do an annual review. If your banker says, hey, yeah, we've looked at your financial statements, everything's good, we don't need to make any changes, that should be a trigger for you as a business owner to say, okay, so I want to make some changes. If things are good at your end, then I need some improvements at my end. Typically, the banks are going to come in and say, yeah, no, the market has changed, your risk model has changed, usually driven by the economy, and so that changes your risk rating code, and that impacts the pricing that we're able to offer you, right?
I love that narrative. I love that narrative.
So it's, like I say, banks make money in good times and bad. Their profitability models are extremely complex. I've likened it to a tapestry, where if you pull on one thread on a tapestry, it's going to impact something that's on the other side of the picture. But when you know the buttons to push, and you know the information to present, and you do it in a logical fashion, and you always got the competition in the back door that you could go to, it becomes a pretty easy process to get this done through the banks.
And I just want to repackage kind of what you've said there. So, because banks, I used to work in specialized lending. They would have leverage loans and cash surrender and all these different kinds of fancy lending. And we would do annual margin checks, and there's all these different checks that they do on you and the risk rating. I ended up taking too many scooter rides one summer when I first discovered the scooters downtown that I would I was always in a rush to get everywhere. And because I did a bunch of those in a short period of time, Amex all of a sudden decreased my limit from this huge limit down to something more modest. And I called them, and they basically were like, yeah, you were using it a lot. So they have all these ways that they scrutinize us.
Yeah.
Now you can say, well, I've scrutinized my tolerance for bank fees and interest and all the things you guys do based on the quality of my business and my entrepreneurship and the progress that I've made. So it's a beautiful thing. I want to bounce back before, if you want to quickly go ahead, Sean, I want to make sure we get back to what that intake process looks like and make a recommendation for us, John, at the end of letting us know kind of the clarity of that intake process and what are some of those things that you gather that we adamantly advocate that people just hurry up and get their butts to get it to you rather than humming and hawing about, this is some top secret information. This is the type of professional that you want to expedite that information to. Also share with us a suggestion at the end of that, and I'll remind you if you forget, of what type of resource can we provide to financial advisors to make sure that they're having this conversation intelligently with their clients.
Or even resources that advisors can share with their clients to begin to start these conversations.
Yes, and we will attach one to this podcast that will come out with John on the back end.
Yeah. So, on the intake process, like I say, warm referral, meeting with the client, initial review, detailed review, drops down from there. And then it's a matter of how long does the client want to keep us engaged, with the banks and that sort of thing. We typically stay on for a year. But so it's, from my view, it's a relatively straightforward process, right? We can send the advisors an information sheet that we provide, just gives a quick overview of what we do, what we're capable of. But just from a capability perspective, let me give you a couple of examples of what we've done for clients. So at the very top scale, okay, we probably should do this in reverse and build up to this one, but let's start with the big one. One client, we generated $600,000 a year for them. Okay, we were able, they were not getting maximum interest on the additional funds that they had available, and we were able to ensure that they got better rates on their investments. And again, they just stayed liquid cash, right? We had another client where we went through soup to nuts, did what's considered to be a treasury review, and they asked, they had good pricing in place. They knew they did. They had a process internally where they wanted to review it minimum every 5 years. When the 5 years came up, they said, we don't have the time to review this. Let's bring in John, because we knew him from his past life, and see what he can do for us. We provided them with a plan to save $265,000 a year and a bunch of internal efficiencies that they could achieve that we couldn't put hard dollars on, so we didn't include it in the 265. But they gained a lot more than that. So I also had a client who came to us and said, we're pretty sure we want to move banks, but we don't know where to go, how to start. But we've outgrown the existing relationship we have. And so they said, we started the process. It's just too overwhelming for us. We have no idea to talk to these different bankers about the stuff they're throwing at us. Can you help us out? Absolutely. We stepped in, we took over the process. Within a couple of weeks, we had 5 offers of financing for them, raised additional money for them, got them better rates on the loans that they currently had, and built full packages. Our estimate on that over 5 years was about $190,000 in savings. Had another client who came to us and said, I am really ticked off with my bank. My lender wasn't the bank typically, but he said, and I'm not getting any response from them. What am I going to do? It was like, okay, well, let's have a look. And so similarly, we went out to market for them. We gathered the information, went out to market with them. Within a couple of weeks, we had 5 offers of financing for this guy. He raised an additional $1 million on his property because he wanted to do some other things. But in the end, he got a much quicker, better deal and had additional money to do some expansion with.
So
So there's a lot of different. There's no one and done with this. Everything, there's no cookie cutter approach to it. There's no silver bullet that says if you do this, you're going to save this amount of money. It's down in the trenches, dig through the information, grind it out. But because that's all we do that very well.
Sometimes you even suggest changing banking relationships. Is that right?
Pardon?
Sometimes you even suggest changing banking relationships?
Yes. Yeah.
Or diversifying could be one, because one thing I've heard from people is everybody thinks it's so, and it is to an extent, hopefully with open banking, it'll change that issue, is have everything with one bank, but then the bank is no longer competing for your business. Is that right, John?
Yeah, there's some truth to that for sure. I think I've said this before, Sheldon, is the best way to ensure you're getting the best deal from a bank is to put a bunch of competitors in the same room and let them fight it out. Whoever comes out on top is potentially going to be your new banker. But you gotta, there's only so much pie out there, right? And everybody is hungry for the same piece of pie. I've seen competition within banks for the same deal because different departments have different mandates and they're tripping over themselves trying to do stuff. So
it was infamous between the branch and telephone banking. There was a lot of wars.
Absolutely.
It's on the market, of course.
Yeah. So if you want to be certain you're getting the best possible deal, you've got to go to market. You've got to have multiple providers bringing the guns to the show. And then of course there's, well, how do we figure this stuff out? How do we compare and contrast these to make sure this is the best deal for us, right? So it's, I had an accountant call me and said, hey, my client has just gotten a term sheet from a bank. They're buying a building. They don't know, but this term sheet is good to eat. Can you help out and provide them some guidance on it? We had a look at it, looked at the financials so we knew the size of the company, explained to the guys exactly what the implications of the term sheet was. Is it a good offer, based on the market, what's available out there?
So this during product application time, not in the midst of you already have the relationship. What a great time to have it audited is when you're going to get that new piece of business.
Absolutely. Yeah. Because then you know what else you can drive, right? So when the bank looks at a loan, they're not just looking at a loan, they're looking at what other business they can get. When they look at the profitability on a loan, they're not just looking at that loan in isolation. They're looking at what's the other business these guys are bringing to us? How much other money do we generate from these? Where's the risk? What else can be pulled into this, right?
And I know Sean has a really good question. Sorry, go ahead, finish.
That's why I say the relationship aspect of this is so important. But that's also why the banks are making such big profits, is because they tie all these things together so well.
I want to confirm one piece that I think I'm understanding before Sean has a really good question here. Does this not garner a reputation for you as you engage John's services, as you become more sophisticated at having those conversations, that now I have to believe there's more than 0% improvement of now the bank sees you in a different light. They see that you're somebody that is scrutinizing things, not as a complainer, as a lot of people will be when they should be paying for a service, but somebody is sophisticated enough to know their worth, to know their value of their relationship to you. And now they're proactively up front, at least more than 0% of the time, going to be giving you better offers because they know they can't really screw around.
Right.
Yeah, absolutely. There's a lot of truth in that, Sheldon. Give you a quick example. When we were setting up our own business, we went to each of the 5 banks here in this little town we live in, and met with all the folks. One lady, I won't name the bank, but she's not there anymore. But when I met with her, told her what our value proposition was going to be, her immediate response was, okay, so when I see your number come up on my speed dial, or my call display, sorry, she said, I know I'm going to have to cut my fees, right? And I said, yeah, you got it. You get the value proposition immediately. Perfect. Right.
I find it fascinating that you help on so many levels. One is helping them scrutinize banking fees, but even beyond that, you're looking at the loans and facilities, credit facilities that the business owner has, and you're scrutinizing the fees in there as well. And you're scrutinizing and looking at, okay, you're getting this and you're paying, let's call it 10% on this line of credit. But based on your credit level and all the things you have, you could probably be getting a better facility with a different bank at a much lower rate. So you're saving them not just on simple banking fees, but even credit facilities and merchant fees that you're paying this merchant for disbursing this funds or this account receivable, but you could be paying a lot less with this other institution. So you're saving them across the board on different facilities they're using. But to even take it a step further, you are helping them. Okay, I understand this conversation may be a little complex for you to have with your institution. Let me step in and have this conversation with them because I'm talking from an intelligent perspective. And the banker now knows that they're not just talking to someone that doesn't know what they're talking about. They're talking to you. And like you said, when they see your caller ID, they know that they're having an intelligent conversation and they can't just BS their way with the customer to say, well, here's the reason why with this, because you can challenge them on whatever they bring back to you.
Right.
So my question now is, one, why are advisors not doing this enough? And two, at what point do you think, more than we suspect. And at what point do you think advisors can begin to bring in these conversations to their client? Is it tax time? Is there a better time to, I think it's a great business development tool for advisors to say, well, first of all, I think I can save you a lot with your banking fees. Can we take a look at that? And then the advisor has this big open door to then begin to offer them more value. But what's the biggest conversation starter that you would give an advisor?
Yeah, and do you agree with that, John, that this is a great business development tool for advisors? Because instead of going in and trying to sell somebody insurance or investments, what better way to start a relationship than saving
absolutely
fees, you know?
Yeah, no, I mean, I think this is a great opportunity for business advisors, whether, they want to look at it from just a straight revenue sharing perspective, or from how can I help this build my business book, right? Because, the reality is there's big money to be saved out here. And every time I explain this business model to people, I get the same result. It's like, wow, this is great. I've never heard of anyone doing this before, right? I've seen some accountants say, oh yeah, well, I'll call my buddy at this bank, but they're not getting true market. They're getting their friend at another bank to try and make something competitive. One offer is not competitive, right? Like, and I guess from an advisory perspective, I use the example of, you wouldn't, hopefully never have to, but you wouldn't go to court without taking a lawyer with you, right? You wouldn't try to sell real estate or buy real estate without a real estate agent, right? You need somebody who knows the game, who knows what's going on, how to translate what I call bank speak into common sense terms that people can understand, right? So, if you take these other advisors and use them when you need to, why wouldn't you take somebody who's experienced and understands it when you need to talk to your banker, right?
And I just want to quickly address those interesting people that say, well, I have, or I would maybe go to court on my own. I have, or I would done this real estate on. Sure, maybe you can and you will, and maybe you will get a result, but you will not get an optimized result.
Yeah. Absolutely.
The risk level of failure is much higher than potentially the reward.
And you'll never know what that true opportunity cost is and the compounding effect of that opportunity cost.
Yeah, absolutely.
There's also the question is, how much is your time worth?
Yes, that's a big part, Sean, for sure, right? Because to truly understand this, I don't want to say it takes 35 years, but it takes a long time. Right. Like I've got the educational background before I get into banking. I've done the certified treasury professional. I've done the Canadian securities course. I've done the mutual funds course. I was a licensed mutual fund representative for years. So I understand, this a little deeper than somebody who's come up through with only a banking perspective and looking at small businesses, right?
Okay, I'm gonna do one, John, and you're gonna do one. We're gonna wrap up the episode. But I like to. We're in the fancy pants world of finance, and you and I are each gonna give a very direct message to the financial advisors. I'm gonna go first. Listen, financial advisors of all sorts, financial professionals of all sorts. It doesn't matter if you're a mortgage advisor, an investment advisor, insurance advisor, accountant. Get your butt into promoting this service. It's not going to be beneath you because you're not going to have to do the work. There's great people at John's firm that are ready to serve you, to serve your clients. You're going to add additional value. You're going to get that loyalty and respect. You're going to free up dollars that can be allocated towards better purposes, whether it's financial planning products, like you've been complaining they haven't found $200 a month that you want them to put in whatever insurance or investment policy, or $500 a month or whatever it is. Or if you just want to take that money back and give it to your kids, give it to your neighbor's kids, do anything with it other than give it to your bank. I want you to give a direct message. Bring the Newfoundland out a little bit, John. Be direct and tell these advisors why they really need to go ahead and do this.
Oh, thanks, Sheldon. Yeah, that's a pretty fancy hat. I gotta say, I'm 60 odd years old. I never had a hat like that, even though it's traditional. But yeah, no, listen. You and I clicked yesterday when we were introduced to each other. We're speaking from the same Bible. It's like we can save people money, and that's what it comes down to: money and time, right? To Sean's point. So the reality is we're successful in what we do. We want to help you be successful, and we do that through collaboration. The series of trophy, I don't know what to call them, trophies or tombstones or whatever above my head up there. Those are service awards from collaborating and partnering with people on a national basis across my career. And the reality is that, I've been at this a long time. And our goal is just, make as an advisor to help make you look better and save your clients money. That's the long and short of it right there.
So if you don't call John, if you hate your clients having money, if you hate their time, if you don't want to offer more value, I put this hat on sometimes at the end of an episode, John, when I want to give that, because I come from generations of fishermen. I'm the first one with front teeth. When I want to give that really direct point of view without any of the filter, get your arse over and call John. And when you want to get a hold of John, take advantage of those services. How can they connect with you, John?
Yeah, the quickest and easiest way is give me a call, 902-483-2342. You can find me on LinkedIn. I might be one of the few John Pelley's on there, but and our LinkedIn page is Colibri Financial Services. And yeah, just
drop that at the bottom of the visual here. And we are going to continue to work with you, John, both through mine and Sean's financial practices and through our sponsor, Pocket Finance, to make your services accessible, to promote them. Any of you advisors that I meet that have heard this podcast that are not taking advantage of John's services, then might get one of these coming up in your face real soon. So thank you so much. Great privilege to have you on the episode, John. I think this is my favorite episode that I've had because of the passion that I have for the type of service that you're offering. And we've had some amazing and great episodes, including some of the biggest names in finance in North America.
So advisors, if you really want your clients to love you, better call John.
Okay, thanks very much.
Maybe I should change my name to Saul. Hey, better call Saul.
Thank you so much, guys. We'll see you on the next episode.
All right.
92% of people trust referrals from people they know. But there's a better way to make those introductions. Wrap your arms around your client with your professional team. Join your client's team free today. PocketFinance.com.